Good afternoon. This Tuesday, March 17th, grain trade on the defensive today. Corn got us turnaround Tuesday, but wheat and soybeans did not have any such luck. We had export announcements this morning. The corn was to Mexico, so they blew that off as routine, whereas Spain came in for a large chunk of beans, well over 130,000 metric tons, but again, market discredited. Unknowns was 160,000. Figured it was China, but who cares? The trade just wants to move lower because the bottom line is they see a bean crop coming. That'll be at the end of January, and they see the crush margins going to pieces, and bean oil will be available from other countries. So let's go through the charts, break it out. What we want to show is that corn is still in an upward bias. Soybeans, they're probably in trouble for a while, and corn and soybeans may go the other way as corn seeks out acreage anyway as it wants to show a more elevated price. So starting with the corn, again, another retreat today after bottoming on Friday at the 440 range, bolting about a 62% retracement to the tick. And when it hit overnight, it's 446 and 3/4. Then immediately back into correction today. Had to find support for the same area just to turn back up into the close. On our spec trade, we are along from 43.5. Wish we were along from here, but whatever. We raised our stop to just under today's low of 440.5 because if we fall through here, then this is going to be a larger A, B, C pullback before she advances. And I'll show that on the daily chart. As you can see right now, we think the Friday low was a wave 4, and we're going to start wave 5 of 3 now into the new year. But if we falter in here and we do break lower, then you can almost see this A, B, C off of last week's highs. We'll draw that in, and she'll head for the 100-day moving average. That's why we move the 4 over to here. If that's the case, we take out 440.5, then we have an A, B, C down to the 100-day moving average, where somewhere from 432 to 436, they will start it all over again for the next leg to the upside, as we expect on corn to continue, because the USDA shocked everybody with that 200 million bushel drop on the carryout number, or I should say an increase in demand, and dropping that carryout down to 1.723. That woke up everybody's attitude of what's going on, and maybe the USDA is worried about something. I think that carryout's going even lower yet. And that's what's going to give us our trend on corn. Now, of course, the overall South American production, if you go back since 2021, growing almost every year. I use the word almost. This year, South America, Brazil, 169, Argentina, 52, Paraguay, and Bolivia and Uruguay make up the difference. We're up to 200 and, 39 million metric tons, almost 240. So a jump of 20 million last year. And of course, the trade is like, no problem, we got beans everywhere. Yet there's a valuation that just seems to be found here. But we still did break down, despite news, too, that Bloomberg News put out. China, they're running out of beans in the southern portion of their country as all the imports were to the north. The south customs are holding up trade for getting beans into the crushing mills. And so now they're finding a 7% jump in their meal prices here in the last week, as it's taking longer than usual to do the quality inspection for imported beans. So beans into China, if they want some beans here in the near term, for the next 60 days, you got to get them from the U.S. So they want to pull some beans out of here and get them in transit. They could have them here in about 30 days, well before they can get them out of Brazil if this area becomes a problem. But nonetheless, we are breaking lower on the beans. March did break lower. Probably a little bit of a bounce here. It could occur into tomorrow, but now that they've fallen through the 983 range, that will maintain the negative movement of wave 3. Wave 3, if we measure 1, add that distance to here, we get it down around 945, which, by the way, on the continuation chart, 945 was our low back in August. And it also happens to be just trend line support as well. When we go back to the 2019 lows and we cross it, we get some support here about 950. So 945 to 950 would be the target if we cannot get back above 983. That's what they're going to break towards here. And the way it looks like they want to do it into January. And of course, the Trump traders are all fearful of Donald Trump going into January 20th. I project that we're going to have a bean low before then as they dial in the biggest bean crop we could ever expect. And what if Argentina starts going haywire? They are dry down there. There's hope for rain in 11 to 15 day, but if they miss that hope, we go into January. Your South American grain rallies come when beans in Argentina go haywire, then we get those January, February surprise rallies. So we'll see. For now, they're going to try to break the beans down. Bean oil falling out of bed now with the crush anticipated to lose profitability with the Brazilian beans becoming available in about 45 days. Also, nothing on Z45. You know, the Treasury Department they just drug their feet and, well, they didn't help the farmers very much. They claim they're so helpful on the Democratic side, and of course many believe Trump's going to stamp it out. Well, either way, where was the Democrats? Well, how come they didn't help out? How come the Democrats never removed the tariffs that were put on China 4 years ago? Where's the help there? The point is, the fix on the bean trade with China could be a lot easier this time around than last time. President Xi knows Trump. He knows Trump is not messing around. So watch out. Things could get fixed quick. Also, strange that the wheat did not respond to this today. This was released today. Russian wheat crop, again, cut. Russia cut their crop now to 78.7 million metric tons. USDA has them at around 82 million metric tons. Whatever. Wheat market did not respond to this story today. Kansas looked like we were going to do something from yesterday. No. Down we go. Even Chicago wheat heading back down to prior lows. We need to turn up now, or we're breaking lower even farther. The continuation for Chicago maintains this negative bias, even crossing moving average resistance. Cannot seem to make a difference right now. So wheat, we just need a miracle in here and some end-of-the-year short covering that can lift this wheat trade as we anticipate a rally into the new year, January, and possibly into April. Now cattle, let's have a conversation here. I know everybody's all scared about this massive outside day that occurred down here 2 days ago. And of course, every outside day down was a prerequisite to further big losses in the cattle market to the downside. But this time, and here's one here too, but this time a little different. The feeder cattle did not confirm it. We'll get to that in a second. Plus, we have this large open interest in index funds that has ballooned now, second largest ever. So when they cough, they implode on movements. Whenever they want to exit, the selling is manifested. So we'll see. We did break out to the upside. I think our support's going to hold here in the 88.5 to 89 range. I've been calling it a bigger picture 89.90 support. But if you really want to nitpick it, it's around 88.5 to 89 here. We should hold and start another bounce moving to the upside on these cattle. On feeder cattle, note there was no outside day down. And yet feeder cattle immediately recovered today. If there was no recovery today, one would have anticipated we were probably doing an ABC fourth wave to 253, maybe even as deep as 250, 249, but she turned up immediately. So unless we have weakness right away tomorrow, I think we got to watch these feeder cattle as a sign that feeders are the leaders. Forget everything I denoted here, and this all turns into a 1, 2, 3, fourth wave, and then we are in our way 5 waves up, and this is going to be a 1, 2, 3, 4, 5 into the new year. So tomorrow is a big deal for cattle. If feeders hold and live cattle find stability here in this 189 range, then live cattle are probably ready for their next leg up. Feeder cattle on the continuation chart was really going to give us a signal is getting over 260. January is still on the continuation chart. March will probably come on next week, but March is only about 80 cents more than January in value. So climbing over 260.5 on a closing basis says we are on our way, and we don't have to worry about that ABC decline that could develop in here yet. Finally, I had to show you the crude oil. Look at the bumper bars. This is a pinball machine. Look at this here. Just pinballing back and forth. It gets above it yesterday, 2 days ago, right back down on the inside. So now we're back to support just under 67. Resistance here now is at 71. If we close over the week's high after tomorrow's Fed meeting and energy numbers that come out at 9:30, Fed at 1 o'clock, we're getting over 71.5 maybe. We are on our way to a larger push in our D wave that stalls out. And then we come down for our E wave later on into the new year. Extend this out here. And then if it either wants to fall through or once you get past the E wave, the next movement is your determining factor, which we think it's to the downside ultimately into the summer. That's why we've done no pre-end of the year booking unless you need to for taxes. We're leaving that alone right now. This is Eugene Grainer with Heartland Investor Capital Management. I hope you find this information useful.